This is Anna Eckstein with Naples Ultimate Luxury Group, MVP Realty. In today's video, we overview inflation report data for consumer and producer inflation, along with real estate data for nationwide, and of course, Southwest Florida real estate market update. All right, let's start. All right, so let's start with inflation rate for consumer inflation. So as we talked in the previous videos, I said that probably June inflation, that's the lowest that we will have for quite some time as far as the inflation rates goes. And from on and now, I, believe, and many experts would say as well, the inflation is much more stickier than many of forecasts being previously, and here we are. So in the month of July, the inflation rose by 3.2%, but was below a forecast of 3.3%. The core inflation, excluding volatile items such as food and energy, fell to 4.7% in July, and it's actually the lowest since October 2021 from 4.8 from prior months, and also below expectation 4.8. So the core inflation is something that is a gauge of the inflation that federal government is really paying attention on the core inflation. As you can see, the core inflation is still very sticky and very high from 2% target for the inflation. All right, let's move on. So this is actually a table of breakdown the inflation based on the items. And I'm not going to spend too much time. If you like, just pause and take a look. This is the month of July. You can see that, breaking down by the items, and the shelter, something that we've been paying attention since the beginning of the fight for the inflation, because the shelter is running really hot and really high. And you can see it being consistency, still 0.4 increase month over month of July 2023. Again, please feel free to pause and take a look the individual items. So producer price index, producer price rate for the inflation, this is the producer, what they experience as far as the inflation. And as you know, if the inflation is continue rising for the producer, eventually the inflation will be transferred to the consumer side. And you can see the producer price index rose 0.8% and is above forecast of 0.7% in July 2023. Core, again, is excluding volatile items like food or energy, and that increased also to 2.4% and above market expectation of 2.3%. Non-farm payroll. The reason why I share with you this information, as you know, that the federal government, they're trying to fight with inflation, they're trying to cool down inflation, the economy, and economy is really being resilient so far. And the payroll, something that federal government is paying attention of how many jobs being added, and how the unemployment rate is actually reflecting in economy. So non-farm payroll is being created 187,000 jobs in the month of the July, and it's a below market expectation of 200,000. And also was following a downward revise from 185,000 jobs in June, and reading also below the average monthly gain of 312,000 in prior 12 months. So there's definitely been on a downside of the creating the farm payrolls. If we look in unemployment rate, we're still at 3.5%. So hourly earnings, our earnings actually still remain unchanged, 4.4% in July from 4.4% in June of 2023. This is year per year, and also increase the month per month 0.4%. So as you can see with inflation, how the earnings actually increasing year over year, month over month. So initial jobless claim, this is data we're also looking more on a weekly. So on a week ending August 19, you can see that it was revised to 238,000 week ending. This is the initial jobless claims, so the people who file for the claims first time, and that is below market expectation. So continuous jobless claims, this is the people who remain without the job and they continue claiming for the benefits. And that was also decreased in August ending week of the 12th, and that being decreased to 1,702. So moving forward, retail sales and the retail sales month over month. The reason why I share with you data, because I would like to share with you the state of the economy in the United States from different perspective, from manufacturer, from sales, retail sales, from job creation and job losses, from inflation. So you can kind of understand what overall health of the economy and where we've been for the past 12 months and where we potentially can go. So the retail sales, you can see the numbers have been decreasing for the past year, month over month, pretty much on a steady decline. And you can see month over month also pretty much, not a whole lot of improvements in terms of the retail sales. So import and export. This is something that I pay attention and I would like to share with you so you can kind of see how we've been kind of plunging downturn on import year over year or export prices year over year. There's not much what you can see about the chart except to look in and you can see which direction we're really going in. Also, month over month, you can kind of see the same. And industrial production and manufacturing production, you can see that industrial production in United States is continue falling down, and it fell by 0.2% year over year in July of 2023, and it's continued extending the decline to 0.4% from the previous month. Manufacturer production year over year, you can see clearly the chart. You don't even need to say the numbers, but you can see clearly it's been declined month over month over month. So month over month for the industrial manufacturer, you can see also the charts below. And if you're going in Philadelphia Fed Manufacturer Index, you can see that we've really been in decline. This is the first month, maybe for the 12 months. We actually really increased by 12 in August 2023 from minus 13.5 in July, with actually better than expected because market forecast actually was minus 10. The New York Empire Manufacturer Index, you can see continue falling below, and it was minus 19 in August of 2023 from slightly above in July. So Richmond Fed Manufacturer, you can also see clearly there's not a lot to say, but we are in construction mode, and the economy, as you can see, and I can see, it's in the path that there's not a whole lot of, positive momentum growth. It's there's a lot of the manufacturer in the construction, industrial, also in the construction. There's some sectors doing fairly well, and there's some sectors just not doing well at all. And for me, I feel like we're more like in a stagflation right now than anything else. And the inflation being so sticky, special core inflation, regardless if you're looking from from the producer inflation to the consumer to, it's, in my opinion, the federal government has a long way to go to fight with inflation. And there's nothing been easy. It's obviously is not transitory, how, being presented on the beginning. I think they have long way to go, and it's just become really sticky. And the economy, like I said, some sectors doing fairly okay, and some sectors not doing well at all. And if you see the oil being back to over $80 a barrel, and that's significantly higher compared to 3, 4, 5 months ago. And that's continue feeding inflation. You can see what happened with grain. You can see what happened with many different commodities. They all they're surging up, and it just we'll see. I think our inflation will continue to increase, at least in the short term, and then see what the future holds. So if you look in the building permits compared to the June of 2023, they rose on a month basis by 0.1%. Housing starts month per month also rose by 3.9%. From negative 11.7 from last June. If you look new home sales, this is for the United States, you can see that it's actually increased by 4.4%, seasonality adjusted annual rate of 714,000 in July of 2023. New home sales month over month is also increased by 4.4% in July from minus negative 2.8 in June. So if you look at existing home sales in the United States, it's actually dropped by 2.2% in month early to seasonality annual rate of 4.7 million units in July 2023. And month over month, you can see existing home sales dropped 2.2% from a month earlier. And if you look in the mortgage rate, gosh, who would knew that we will be over 7%, but we are. So in a 30-year fixed mortgage with confirming loan balance of 726,200, we increased by 15 BPS points, and it's 7.31%. Yeah, the rates is definitely increased, especially for the short term. Obviously, there will be rates drop. There's, in the future. I don't believe that, the internal rate will be dropping anytime in 2023 unless something is really will be breaking in, which you don't know in the states of the economy. And moving forward, we'll see what the future holds. But I think the federal government, in my opinion, they probably will increase internal rate, maybe 1 or 2 hikes, and then probably will hold for longer. And who knows, I believe in 2024, maybe we will see some relief of those rates as inflation cooling down. And again, wish I would have a, magic, vision in the future, but I don't. But we'll see what happened. But that's the rate what we have right now. You can see the mortgage rate is actually fell by 4.2% in the week of ending August 18. So the refinance index also decreased by 2.8% in the ending of August 18 week, and purchase index also fell by 5%. So recession, the end of moratorium, and the tsunami of foreclosure. Well, this is $1 million question, right? As far as recession, it's hard to say, of course. Many economists now, they predict the soft landing. I'll be honest with you, like my opinion, at least, I don't see the soft landing. With everything that's going on, it's just, there's so much trouble in sectors now in economy, and reinflation with so many different things. I think the federal government have to keep the rates longer than maybe they even expect, and to keep the rates at this rate for that long. I mean, there's something has to be break, but we'll see. I don't have a magic ball, and we'll see what happens. But you can definitely see the foreclosure is its lowest since 2008. And default notices, schedule of action, bank repossession, it's in the lowest. And the reason why, think about this way, if you're the homeowner and you sit between 2 to 3% of the mortgage rate, what is incentive is really for you to go and sell the property right now, so you can hop in 2023 pricing with 7.3% interest rate. There's no incentives. So the only what I can see is how these filings and default notices can be increased if we have a really massive unemployment rate coming. And I don't know, maybe the government will pull the magic button and we have a soft landing and everything will be just fine. But for now, I don't see any flow of this huge foreclosures. There's no reason for that. The people who the huge difference between 2008 and 2023 is in 2008, there's so many people got those mortgages who not even qualified. You just could walk into the bank, get the mortgage, and they don't even question, can you afford the home or not? The people who purchase, 2020, 2021, like any after this financial crisis that we had in 2008, those people, for majority parts, they are truly qualified people with employment. And the interest rate is so much lower when they qualify compared to, let's say, even 2008. But that wasn't even the interest. I think the majority problem was really the people just was getting mortgages on the left and right without any proper pre-qualification if they can afford to hold a mortgage. And now the people sitting on the equities, they're sitting on a good interest rate for majority part. And I think unless you have a major unemployment skyrocketing, I really don't see foreclosure coming anytime soon. So I found this little stats, and I thought that was quite interesting to share with you. The appreciation for the last 3 years in 20 major cities. And you can see that on average, the appreciation from March 2020 was 41.8%. This is nationwide. And we will take a look later at the local data. So, and you can pause and look this video, just depends if you live in any of these major cities. But let's say in Atlanta, on average, appreciation in Atlanta was 49.5%. That's huge, guys, if you really think like how much inequity you can really gain in just the 3 years. So just really thought I would like to share with you. So if you'd like to pause, please do so. So this acceleration of appreciation is not the same as a home depreciating. And again, can the homes continue depreciating? It could be like those factors. For example, we talk about, huge, massive unemployment, and there's a lot of people will be forced to put the properties for sale. That would definitely trigger depreciation in the home pricing. But again, it has to be a significant event. It's not going to be just the way how we're trending right now. We're still, in some places, there's still not enough of inventory. The demand is still continue to be high. And again, like I can see the home pricing would drop, but it has to be something significant. Huge unemployment, skyrocketing, massive layoffs. So one of those factors that really would start bringing some of the prices down. So let's take a look at our local data. And I always compare 4 different cities, and we will start with active inventory. We compare Naples, Marco Island, Bonita Springs, and Estero. And we divided them between single-family homes and townhouses and condos. And we're looking at 2 different timelines. One, what happened a year ago, and what happened 30 days ago. So we compare July 2023 to what happened in July of 2022 and in June of 2023. So in July, you can see for the single family homes, active inventory is the number of properties listings that were active at the end of the month, at the end of the July. So you can see in Naples, we had, compared to a year ago, we have a 7% drop. In Marco Island, it's actually active listings increase by 33%, in Estero as much as 40%. And 30 days ago, we actually dropped a little bit across the board on our inventory on active listings for single-family homes. For condos, you can see a year ago, we definitely gained some as much as 70% in Marco Island for condos on active inventory. And for the past 30 days, we definitely dropped across the board. Moving forward, we take a look on the new listing. New listing is the properties that put on the market during the month of July 2023. So let's compare to a year ago. You can see Bonita and Naples dropped by 20%. Marco Island gained 6%. for 30 days period, the across the board drop in the new listings. That can, if you take a look on the new listings, we are going in our off-season summertime, so it's kind of seasonality plays out a little bit here. That's the reason why you see kind of drop across the board. For the condos, you can see kind of mix a little bit. In Bonita, you gain new listings, Marco Island, but you drop a little bit in Naples and Estero. And compare the 30 days period, you can see that we gain in Naples and Bonita, but we do lose some new listings in Marco Island and Estero. If you take a look at month supply of inventory, so what that is how long it would take on average to sell your property in this 4 different cities in the month of the July. So on the middle, you can take a look for each city. It's actually exactly a month of supply. But if you can compare to the 30 days, you can see that month of supply of the inventory definitely increase across the board, regardless if it's single family homes or the condos. You can see in Marco Island, the condo inventory increased as much month supply, right? Increased as much as 143%. We did drop across the board also for the 30-day period for the single family homes and the condominiums as well. So showing per listing is on average how many buyers show up to see the listings in the month of July. And you can see that for single family homes a year ago comparison across the board, we did lose a little bit buyer traffic. We did gain a little bit in Marco Island. For the condos, we did lose across the board compared to a year ago. And pretty much we gain for the condos and single family homes, except the Bonita, for the 30-day period. So there's a little bit more buyers show up to see the homes for sale. So pending inventory, that's the properties that went under contract at the end of the month, July. So you can clearly see on single family homes, it's actually we gain a little bit pending contracts compared to a year ago, except in Estero, we did lose 9% there. For a condos and townhomes, again, Estero was a little bit on the losing side of 13%. And compared to the 30 days, you can clearly see here that Marco lost a little bit on single family homes by 20% of the pending inventory. That's the homes that went under contract. Estero gained 20%. And for the condos, the Estero also gained of 25%, but Marco ended up losing the 10% and Bonita 15%. Medium price of last list price. That's what actually end up selling the property if we take a 100% of the last list price. That's how much on each different cities, right? That's how much those properties sold from the last list price. So if you take a look for single family homes in July, compared to a year ago, across the board, it's actually lost as much as 6.7% in Marco Island. For the condos, also we do end up a little bit in a loss, and as much as 2.4% in Bonita Springs. And compared to the 30-day period, pretty much everything ended up to be in a downturn, except the Naples on single-family homes end up to be positive 0.1%. All right, medium sales price. So medium sales price, we're looking at July 2023, and we will compare what the medium sales price, that basically property closed in the month of July to a year. You can see actually across the board, as much as 39%, the medium sales price went up for single-family homes in Marco Island and slightly down by 7% in Estero. For a 30-day comparison, you can see Marco Island still go in the winning by 20%, followed the Bonita 12%, and Naples and Estero minus as much as 3% and 8%. So if you're looking in condos or townhouses, you can see across the board, Marco Island is still up for a year ago by 42%. And they up slightly in Naples and Estero, and they are down actually in Bonita by 2%. So compared to the 30 days, you can see Marco Island still in the winning, the Bonita slightly up, and Naples and Estero, they're actually minus by 4% and 9%. So if you take a look, dollar volume, that's total properties sold in the month of July based on the cities. And you can see that in Marco Island, you definitely see they up dollar value by 146%. In Estero, slightly down by 31%. And Bonita is up 32%. If you compare to the 30 days, then you can see across the board, they actually down as much as 44% in Estero. Compare for the condos, we're looking that Marco Island is definitely on a winning strike by 31%, and as much as 48%, Estero is down for a year ago. And as we're looking for 30 days comparison, you can see Estero also down, well, basically it's across the board, as much as 58% in Estero. So if we take a look, closed sales, this is our last chart for this video. And you can see the closed sales is number of sales, number of closed sales that happened in the month of July. So it's not the property that went under contract. The property actually closed, escrow, exchange the keys, and happy buyers, happy sellers, hopefully, right? So that's what happened in the month of the July in these 4 cities. And you can see the numbers, if you like, on the middle. And we will compare percentage. So the closed sales actually for the single family homes up as much as 180% in Marco Island. And that's definitely on the winning strike. The Estero is down by 22%. For a single family homes compared to the 30 days, you can see across the board, they are down as much as 36% in Estero. If you look in condos, the condos actually across the board down compared to a year ago as much as 51% in Estero. And 30 days, they also down as much as 57% in Estero. Again, seasonality plays out quite a bit as we continue moving through the summer. You can see that this is not our busiest season. Busiest season would be, I would say, from January to May. And then we do see a pickup also at the end of the kind of fall through the December. A lot of people who still would like to lock in themselves something for the season would come over maybe there in, mid-fall and start looking to purchase the properties that they can lock in themselves for the tax purposes, or before the season they just would like to find something that would be suitable for them. Now will be 2024. So that would be kind of the strategy for some of the buyers would come over before the end of the year so they can have a place for the 2024. And the majority of our snowbirds would arrive in 2024 and look for the perfect home. I hope you find this video valuable for you and for your family. And if you consider to relocate to Southwest Florida or find your winter home, I would love to help you to be the guidance in your real estate journey. And if you're the seller, if you're considering to sell your property in Southwest Florida, I would love to meet with you, sit down and create the detailed real estate marketing plan, how to get you goals, your real estate goals as quick as possible at the highest price possible. And my name Anna Eckstein with Naples Ultimate Luxury Group, MVP Realty. Thanks so much for watching.